Understanding path dependency, a critical analysis of historical influence on business practices. Path dependency is a concept that describes how historical preferences or practices can strongly influence current decisions and the direction of industries. This phenomenon reveals a deep-rooted resistance to change, leading organizations to continue along a particular trajectory, even when more efficient alternatives emerge. By examining path dependency, we can better understand the challenges that companies face in adapting to new technologies, product innovations, and market dynamics. What is path dependency? At its core, path dependency means that history matters. The choices made in the past have a lasting impact on present and future options. This concept is particularly relevant in the context of businesses and industries, where initial decisions can set standards that persist over time. Unlike more nimble organizations that pivot to adopt newer methodologies, path-dependent companies tend to hold on to older technologies or operational practices due to various constraints. Reasons for path dependency. 1. Cultural and historical context. Companies often develop specific cultures and systems based on their historical context. Employees become accustomed to particular workflows, which creates inertia. 2. Cost implications. Transitioning to new technologies or practices can be costly. This includes not only the monetary costs but also the potential disruption to existing operations that can deter decision-makers from opting for transformative changes. 3. Policy decisions. In public policy, path dependency is driven by cautious or uninformed decisions taken by policymakers. They may base their choices on past experiences without fully considering emerging alternatives. 4. Rivalry in market perceptions. Once a technology or standard gains traction, it creates a network effect where supplier and consumer preferences reinforce its dominant position, even if it is not the optimal solution. The historical institutionalist perspective. Academics often explore path dependency through the lens of historical institutionalism, a theory in political science. This approach posits that institutions evolve at a slower pace than anticipated, which constrains their ability to adapt to new challenges. Policymakers might default to conservative decision-making due to past experiences, leading to a cycle of unchallenged practices. An excellent illustration of this is how towns develop around factories. If a factory is built first, subsequent residential areas and amenities tend to cluster around it, despite any long-term advantages of relocating the factory to a more suitable area. Industry examples of path dependency. Fossil fuels and the automotive industry. A noteworthy instance of path dependency can be seen in the fossil fuel industry. Despite the growing acknowledgement of renewable energy sources, fossil fuels remain entrenched due to a vast network of supporting industries. The automotive sector still predominantly manufactures gasoline-fueled vehicles, despite the increasing calls for electric vehicles, EVs. This is largely because the infrastructure for fossil fuels, refineries, repair shops, distribution networks, etc., is deeply established, making the shift to alternative fuels a complex, costly challenge. The digital photography revolution. The rise of digital photography showcases another classic case of path dependency. Camera manufacturers, especially those specializing in film-based photography, faced a significant challenge when digital technology surfaced. Many companies were initially slow to pivot because their established products, camera films, development services, represented a high percentage of their revenues. Their existing business model created a reluctance to explore new formats, eventually leading to a dramatic decline in market relevance as digital photography took over. Palm and the smartphone market. The decline of Palm, a pioneer in personal digital assistants, illustrates how path dependency can lead companies into obsolescence. Despite its initial success, Palm failed to adapt its offerings in the face of the burgeoning smartphone market, which integrated advanced computing features with communication capabilities. By failing to shift strategy, Palm lost its market foothold and saw its technology rendered obsolete. The implications of path dependency for businesses. Understanding path dependency is crucial for businesses that wish to thrive in a rapidly changing market landscape. Here are several implications. 1. Strategic planning. Companies must recognize their historical practices and consider the potential consequences of holding onto outdated systems. Emphasizing agility in strategic planning can enable firms to pivot more readily to innovative solutions. 2. Investment in research and development. Businesses need to commit to continual innovation to avoid becoming trapped in a path-dependent cycle. By investing in R&D, organizations can explore opportunities ahead of market shifts. 3. Change management. Organizations must cultivate a culture that embraces change rather than resists it. This may necessitate retraining staff, revamping internal processes, or even altering company leadership to foster a more innovative ethos. 4. Market awareness. Keeping an informed eye on industry trends can help leaders anticipate potential disruptions that might arise in their markets and allow them to adapt proactively. Conclusion. Path dependency illustrates the complexities companies face as they navigate their historical choices and strive to adapt to new realities. While change can be difficult due to established practices and financial considerations, an understanding of path dependency can empower businesses to become more proactive and resilient in their approaches. By embracing innovation and remaining vigilant in the face of emerging trends, firms can work to break free from the constraints of their historical paths, ultimately leading to greater success and sustainability in an ever-evolving marketplace.